Hello, I'm here on the Nasdaq on the monthly chart showing that it's all bullish. I'm just doing the preparation for tomorrow, even though that we don't need to go for the monthly and weekly, but monthly market structure is bullish, weekly is still bullish. Let me go back before I start doing the market structure. Let me show you one thing. Today, I wasn't confident to place a trade today. Why? Because we are consolidating and we are barcoding here, and I want price to break down here or break up here, and my bias on the weekend was still bearish. Now we are getting very close to start becoming bullish, and we will have to break this intermediate term high. If you understand about market structure, it's very important once we break an intermediate term high, and also should we shift the market structure towards the bullish side. This candlestick that is bullish, engulfing candle in the 4 hour is very important. Now, it's all going to be about taking this high. Let's see if it happens overnight or London. If it doesn't happen, I'm expecting to start having a consolidation and not going anywhere. So the daily should break this swim high, but going back to today, before jumping, I found that it was a difficult day for me because I didn't have a clear bias to take um, the daily range. So imagine you are bearish. This could have been a good trade. Now, I wasn't very confident to be bearish, and I don't trade below the 5 minute chart. So this is not the proper engulfing candle because the body has to be bigger than the previous body also. Now there was a nice trade to the longs. I don't tend to trade at these times, but yeah, I mean you can see the fair value gap filled, and after you get a nice trade to the upside. Anyways, there is always, you can always trade, but there are days with higher and days with lower probability, and today definitely was a day with lower probability because where are you going? I mean, if I had to choose based on this information without seeing this, I would be going towards bearish side. Now we are in consolidation and we could break to the upside or still go down. So let's see what happened tonight and tomorrow. And tomorrow in New York, I will make a decision if the odds are on my favor and I have a clear bias where we're going. Even though if I don't have a clear bias, sometimes I can um, place a trade with a lower risk. But anyway, let's go to the market structure, how prepared. Monthly is bullish, weekly is bullish, but we are very close. There is a possibility that this goes all the way down, and this short-term low in the weekly, it won't change the market structure, but it will put us in a position where there is a very shift in market structure in a weekly, meaning that price might drop all the way to this swing high as a support or even lower. Now, we are not there. It might not even happen, but yeah, that's to keep in mind. That is a long-term view. Now, daily is a situation where if, as I say again, if we break this swing high, we're going to have a shift in market structure to the upside, and that will give us a bearish trade, sorry, a bullish trade, looking for a bullish trade on Tuesday, tomorrow. And on the 4 hour is the same high as the daily, and this is intermediate term high, and I put it here in Spanish. Si este intermediate high se rompe, estoy bullish. That's what I just say. If this intermediate term high is broken, I'm bullish. So we got a bullish engulfing candle, and let's see what happens. Now, going to ES is the same story. I mean, monthly, weekly market structure is bullish, and here the thing is where we had a swim high in the Nasdaq. If you see here, this swim high here there is no swing high because this high is higher than this high. So you want to have the middle candle is the highest and the left and the right candle lower to have a swing high. In this case, we don't have a swing high as this candle is 96.5 and this candle is 96.25, meaning that we don't have a swing high. Now in the 4 hour is clear. That is an intermediate term high. So we have a lower swing high and a lower swing high to the left and to the right. And in this case, ES has already taken the high that NQ hasn't taken yet. So the high to compare this high is 96.25, this high is 90. So I made a mistake. I'm just checking. It's good. I make these videos because I'm doing it live here. I'm not hiding anything. And this, as you can see, this is a mistake. That is wrong. Now, it's not a horrible mistake because this becomes the intermediate term high, this candle. This candle has a swing high lower to the right and a swing high lower to the left. Just being honest, 100%. And here I wrote it in Spanish, it's the same thing. And I'm just explaining if this intermediate high is taken, I will be bullish and it will be also a shifted market structure. Now, you cannot call this a shifted market structure displacement. You want a proper, strong break to the upside to have that confidence. We're going to keep going higher. Also, we have this bullish engulfing candle you can see here. And I just wanted to show you that. So if I go to NQ, I just wanted to check. I mean, this is very clear. Yeah, this swim high is very clear to me. So ES is the same story, but we'll be higher here. We are in an area where I expect NQ to get there. So let's see how we get overnight and London session. So New York, I might place a trade. For the things I'm seeing bullish, but you never know, because I'm going to show you the next step. Why you never know? Because this could be a bearish, because SMT, if someone knows about SMT from ICT, smart money technique, is when we have a swing high in this case that is taken, but the other in this index it hasn't achieved it. So Nasdaq hasn't managed to break the swing high that ES has managed to done. So that sometimes is an indicator that two indices that's supposed to move coordinated, they don't do, and they don't move at the same time. And when that happens, because uh, Nasdaq and ES, just to make you understand, they move quite coordinated 95, 90%, sometimes 99%, and they move nearly symmetrical basically. Now, when those things don't happen and you got an SMT, there is a chance that is the big money. So the big banks, the big funds are putting big amounts of money, and you got these SMTs, we call it. And when it happens to the high, that is bearish. When it happens to the lows, it's bullish. So if we had a swing low taken here and it's not taken there, sometimes it will be a bullish SMT. This case is a bearish SMT. This high has been taken and this high hasn't been taken, so we got a lower high here and a higher high here that has taken it here that hasn't been able to taken it. So that will be a bearish SMT. Now SMT is very dangerous because trading is way more complex than just doing SMTs, but SMT is an extra tool you could use to verify towards the trade direction, and sometimes it could give you an indicator to be worried about it. Now, I used to take it more serious in the past. When I mean serious, I used to put a lot of focus towards it. Now, I do have a look into it and it helps me, but not as much as in the past. I think market structure and higher time frame PD raise is the base of everything. These are small things that adds to your tools and it's an extra. Let's say it's like an extra on top of that. But here is something to worry about if you're bullish. So what does it tell me? We are in June, and we have to say that June is a month of consolidation. And that tells you exactly what we see. We are in a consolidation stage. Price is not clearly going anywhere, and you have to be very careful. And if you take a trade, you need to take a trade and take the profit as soon as possible. I like to stay away from the markets when I don't have a clear bias, because you could be burning a lot of money, and I have the experience of that, so I'm more careful. And now, yesterday was a day that for me was a day by the calendar when I'm in news, because this week is um, FOMC, meaning the interest rates are going to be released. So you have to be careful. And the day before FOMC, I don't trade, and even the day of FOMC, I don't trade either, because there is a lot of volatility, a lot of speculation, and a lot of manipulation. So you have to be careful with those type of things. Now, say that in my calendar, following news and fundamentals, you're supposed to trade theoretically Monday and Tuesday, but like I didn't like at all how the day was formed, and I stay away from the markets, and I'm glad I did that. So in conclusion, today I have to see a very clear overnight and London session that gives me a clear direction where we're going. Now, I have low expectations because it's June, and especially because it's FOMC, so the big players might not be placing big trades, so we might not have a clear bias. If I trade, I will most likely trade with the lowest amount of risk. And that's all. Good luck on the charts. Take care. Bye bye.